So if you've watched any of this channel, you'll see some travel stuff, Malaysia, and so on. But what can I really add? What value can I really add to people that watch? Well, if you were my son, he's 9 right now, and he's not that interested in what I do for a living. So maybe one day, when I'm dead and gone, he'll be able to watch this video. So I'm a trader. So come 10:30 at night in Malaysia, the bell rings at the US stock markets, and I trade until 5 in the morning. So a lot of people are interested in trading and want to kind of get into it, but they don't know where to start. So in a previous video, I showed you how I introduced to the school, to their investment club, the use of TradingView and replay trading. If you haven't seen that video, check it out. It's just like, it's what I would do if you gave me an hour with like your kids, because it's the gamification of trading. You get the screen up, you go back in time, and then you buy and sell, buy and sell, buy and sell. So it's just good fun. So let's say you undertake that little game, do it a few times, and you're like, yeah, I like this, I want to do this. So here we go. This is the stage you're at. What do I do now? Right, well, first thing is open a brokerage account. So for me, that's the obvious choice is Interactive Brokers. Not only will they act as a brokerage, they also act as a bank. There are many others, depending on where you live. But for me, they're like the cream of the crop for just your trade anything, any market. So if you're Malaysian, you want to trade the Malaysian market. If you're European and want to trade the French market, UK and trade the English market, US, and you can trade almost all exchanges in any currency from Interactive Brokers. So anyway, you open up a brokerage account. At least you start the ball rolling. There's lots of documents to sign. You need to fund your account. But it's good to get that bit of admin out of the way. That's number one. And they even just offer interest on your balance. When you transfer money in, it starts earning interest. So why not? I kind of use mine as a bank account. I sometimes have a statistic. No publicly traded brokerage has gone bust, whereas plenty of publicly traded banks have gone bust. So do you want your money with a brokerage, or do you want your money with the bank? Anyway, I'm digressing. So you open up your brokerage account. Step 1. Step 2. Money. You need some money. So basically, any amount up to as much as you can is where you want to go with this. And later on, I'll tell you how it changes the way you can or can't trade. But basically, want as much money as possible. But even if you only have $100, $50, make a start. Okay, so that's number 2, find some money. Number 3, you got your brokerage account, you're ready to go. You need to, well, let's say you want to approach this seriously. You want to make a serious go of putting your money to work. So you've got, let's put it down to 2 choices. You can invest or you can trade. Now, investing, just to keep this simple, investing is you buy some stock or some bonds, or you buy something and you leave it because you're busy at work, you're busy at home, you've got stuff to do. I just want to put my money to work, and in like 10 years time I'll see how much it's worth. So that's investing. Then there's trading. Trading is more active. So you'll buy some stuff today, and then at some point in the not too distant future, you'll sell it, buy something else, sell, buy, buy, sell, buy, sell. That's trading. That's more active, and it needs more time. So are you going to invest, or are you going to trade? Or are you going to do both? Are you going to take half your money and invest, half your money and trade? It's all possible. But just think about the time you can commit. Okay, so let's say you go down the investment route. This one for me is quite simple. All you're going to be doing is buying, well, if someone said to me, invest, James, I just want you to invest, what are you going to do? So, and again, this is all for education. This is not advice. This is just me talking to myself or to my future son. Sorry, my current son watching this in the future. So I say, well, I've got no time. I'm busy with my job or my business and family. I just want to do something with it. Well, me to myself, I'd buy the S&P 500. Maybe if I was feeling risky, I'd buy the NASDAQ 100. So how would I do that? I would buy the SPY index. So it's very easy. It's $500 a share. I'd go in with my $500. Well, it's slightly more. It's 610 today, but you get the point. I'd go in and buy one. That's it. And depending on how much money, I would, as frequently as I could, I'd just keep buying the S&P 500. That's it. That's all I'd do. Simple, and I'd just accumulate as much of that as possible. Let's say I wanted a little bit more spice. So I'd buy the QQQ, which is the NASDAQ 100. That's the ticker. And the SPY is the ticker for the S&P 500. Very simple. And then let's say I want a bit more spice. Well, I'd maybe buy IBIT. That's the ticker for Bitcoin. So you can start with maybe the core single of SPY, the S&P 500. And if you've got a little more time or you get a little bit more confident, you can broaden out the things you invested in. And all you're doing is buying them one at a time. So let's say you really like Tesla and you think their new Optimus robot is going to revolutionize every home. Well, you buy a little TSLA stock, Tesla stock. It's easy to find these tickers, by the way. Just either your favorite search engine or your favorite AI engine, just like what's the ticker for S&P 500. You don't need, I don't need to go through all that because it's so easy to find. What's the ticker for the tech index, which it should throw back the NASDAQ 100, okay? Like if you want to buy the Dow Jones, it's DIA. And anyway, and Tesla, what's the ticker for Tesla? That's how you're going to find this stuff. And the share price is in dollars. So if you're doing 1-for-1 with no borrowing, if the S&P 500 today is at 610, it's $610 to buy one share. Anyway, all this stuff is really easily found out. Or if you have any questions, ask them in the comments, because I don't know what you don't know. I'm 30 years in this game, and it's all just in the back of the brain somewhere. Anyway, that's your investing. That's just nice and simple. You can add more shares as you like if you've got special interests, but you're just buying. You're accumulating as regularly as possible, like clockwork. You just keep on buying. That's what I would do. That's what I'm telling my son to do in this video. Let's say now you've got a little bit of time, or you've got a bit of interest, like me. I've always been, I don't want to say obsessed, I've always had a passion for trading, buying and selling. So you've then got two more questions to ask. Are you going to be a fundamental trader or a technical trader? What the hell's that? Well, fundamental trader will create a mind map of where they think things are going with the economy. Are the tariffs going to have a big impact on the economy? Are the interest rate rises or increases or decreases going to have an impact? Do you think China is going to steal market share? All these things. And people bring up these kind of visions in their head and then place a trade based on where they think the global macro situation is going to go. And as I've said in a previous video where I had a call from a friend about exactly fundamental trading, was that unless it is significantly mispriced, you have no edge. So I'd suggest watching that video where I try to explain to our friend that fundamental trading takes a real mind shift in making it a successful endeavor. So go to that to figure out if you're going to be a fundamental trader or not. The next option is technical trader. So there's basically two. If you're a trader, you're fundamental or technical. I guess for all intents and purposes, if you said to me right now, James, what kind of trader you are, I'd say technical. I'm not a charting technical trader. I trade based on volatility. So that's another story. The most basic net technical trading is what you'll see on YouTube. Guys will have a price chart, which I'll show you. Let's look at it now. So I'll just recap quickly. you can very easily create a free account in TradingView. So it's tradingview.com/chart. And then this here is the S&P 500. So it's got all these funny letters, ETF trust, don't worry about all that. Basically, when you click on that, you can say QQQ. So you see this is the NASDAQ 100, which is also known as the NDX. Oh, I'm only on crypto only, that's why it's being funny. So see this NASDAQ 100, which is also the QQQ. See, it barely changed. Did you see that? We've gone from NDX to QQQ. There's many tickers that are the same thing. So I'm sorry if I'm confusing people, but those are kind of the main ones. So anyway, so SPY is the S&P 500. Okay, so a technical trader. Let's go to Tesla. Here's Tesla. This previous peak here is in 2022, and the most recent peak here, December 2024, when he got basically in Trump's back pocket, and they figured, oh, all of Elon's stocks will go to the moon because Trump will make executive orders that support Elon's companies. Anyway, so what a technical trader will do is he'll go over here in the trend lines, and he'll draw a bunch of these things. So maybe let's do ones that impact the stock. So a technical trader would say, well, that's horizontal line. So they'll look for something called support. Support is buyers. So where on here would a technical trader would say there's buyers at previous highs. So see this cluster here? That's a section of previous highs. So they would buy Tesla on this line. This is technical trading. It's looking at these charts and trying to come up with some kind of guesstimate of where people will start buying the stock. Does that make sense? There's then all these indicators you can add, from moving averages to, well, you can scroll down. These are all the indicators on offer. And what a lot of young people do is they cover their chart in these indicators. They play with the settings, trying to find some kind of secret source, some secret recipe of these indicators that will tell them exactly when to buy and sell. And it's easy to work out. You cover your chart in all these indicators. So let's stochastic. Okay, here you go. Here's stochastic. So a lot of people go, oh, when it crosses the blue and gets above the red, we're a buyer, and then we're a seller, and so on. People will put all of this stuff, and then they'll try and they call it confluence, where you get not only a stochastic buy signal, but a moving average one, along with a support line and a Fibonacci retracement. Like after 30 years, I've seen all the indicators that people try and use to create a buy or sell signal. You can tell I'm a little well. If it were that easy, we'd all be trillionaires. So it is not, is the story. But so anyway, a lot of people start by drawing a lot of lines and trying to guess where the market's going to turn so that they can buy their stock and then sell it. That's technical trading. You can also, obviously, do both, combine it. So you have an idea of where you think the stock market or a stock is going to go at some point. For example, Tesla. There will be, as you can see historically, it goes up, it goes down. So at some point, it's currently going down, it'll go up, is the general rule. And at some point, when it's going up, it'll actually go down. So you can combine both. You could say Tesla's going to do earnings at such a date, or it's coming out with its robot update on this date. So prior to then, if it hits support, I'll be a buyer. And that's how you build your ideas. So after you've decided if you're a fundamental or technical trader, or both, you then decide, well, your next question is, what products are you going to buy or sell? Are you going to stick to stocks? Question one. Are you going to, if you asked me, I would say I'm going to trade US stocks. Why US stocks? Well, they're the most liquid. The US is the cheapest market to trade on with the tightest spreads. All this will make sense if you just Google any of these terms. And at the moment, it's the best market you can trade on in terms of costs and liquidity. That's the answer. And any company from around the world can list on the US market. It's not US only companies. I mean, Baba is listed on the US stock market. BP via an ADR is listed on the stock market. Brazilian companies are listed on the US stock market. Anyway, so you can trade stocks, you can trade forex, you can trade commodities, you can trade crypto, you can trade options. And options are a derivative of something else. So you can trade Tesla stock and you can trade Tesla options, which are based on the stock price. There's also futures options and index options. For simplicity, I would, if my son was asking me, Dad, what should I trade? I would say US stocks. I wouldn't trade forex because there's simply, when you mathematically calculate the volatility in forex, it's almost impossible to make money. Only via the leverage that they provide is there the remotest chance. But I've seen studies where they've proven that there's simply not enough volatility to make more money than the cost of trading. Anyway, that's a separate note. I would stick to US stocks. Nice and simple. There's no futures, for example. You have contract sizes and it gets a little complicated. Stocks are a nice and simple place to start. And we all know the names. We all know the Apples, the Amazons, the Teslas, the Netflix. You can almost trade the products that are around you. And that's when it really kind of, it's sometimes nice. We're driving somewhere and my boy, you watching this, you're playing Roblox. And I get great comfort knowing that I actually hold Roblox stock. Our Netflix subscription, when we go to watch something, I get great comfort knowing that I own a little part of Netflix. You can own Coca-Cola, you can own Mackie D's. I actually really enjoy owning the companies that I use on a daily basis. Anyway, so I would go with stocks if I was you. If you're asking me, my boy, I would say get yourself an interactive brokers account, put in some money, and then stick with stocks to start with. It's a good starting place because from stocks you can do options as well. So you'll get a nice broad experience. And then if you said to me, Dad, fundamental or technical trader, well, I'm biased. I would go with, I'd go step over that fundamental and step over technical and let's trade volatility. And that'll be the next step. But I'd say before we do that, buy your favorite company. So my boy would probably say, I want to buy Roblox because they're awesome. And I'd say, great, buy a couple of Roblox stock and let's see how you feel when your $500 goes down in value. And see how you feel when your $500 goes up in value. Just get a feel for it. And in your mind, write down either on an Excel sheet or a notepad or an online notebook why you bought that stock on that date at that time. Was it a fundamental reason? Was it a technical reason? Or was it both? Write down something. And then what we'll do at a later date, when you either want to sell it, hold it, or buy more, we'll start building up a picture of what worked and what didn't. That's the next step in this process. Building up a picture of what worked and what didn't. So if you, my son, for example, bought Roblox because you've dropped so much money into buying shields and body kits and stuff that they can't have possibly lost money, and all your friends are now on Roblox, that's the reason. Well, let's see if that plays out in the stock price. So that would be my stage one. And keeping that, let's call it a journal. You could just call it a notebook, but traders seem to be obsessed with calling these things journals. Be very meticulous in the price you paid, the date you bought it, and any bit of information about why you did it. And then what you'll do is build up a picture of what worked and what didn't. And then from there, you can build a strategy. Because I've got one truth. We're going to talk more about truths in another video. I've got one truth for you. I've been through Now, I've been through one hedge fund, but I've been through a lot of trading houses, and there is one absolute stone cold truth. I have never seen two traders trade the same way. Every single trader I've ever seen trades differently. So it's not about someone telling you how to trade. It's about you developing your own trading system or strategy. And that's the key. You must develop your own system, your own strategy. And we're going to do that. We're going to step through how to do that. And I'm trying to do it the most simplest way. Open the brokerage account, money in, find the US stock of your choosing, write down your reasons, and buy or sell your share. And then let's see what happens. If you want to buy more than one stock, great, buy another one. Buy Tesla, Netflix, and some SPY. And then let's see what happens. And see how your emotions are as those valuations change on a daily basis. Do you feel sick? Are you happy with the way they've changed? Do you want to take a profit? You'll have an emotional reaction to what you have done. So you need to be sure to buy the smallest amount possible, just to see how you cope with it. Okay, I'd say that's a great place to end. That's got you up and running. You've got your account, you've got some money in, you've had to think about the stocks, fundamental, technical, you've had to play with all the indicators. No doubt you've done what everyone else does and tried to somehow build a great big indicator system that tells you exactly when to buy and exactly when to sell. I kind of joke about this because that's what all the kids do when they find this. That's the first thing they go to is a bunch of indicators. Anyway, and so you've got some stocks, or one stock, it's going up and down, you're losing money, you're making money, it's all over the place, and you're having that emotional reaction to trading. And then see how that feels. And in the next phase, we'll take this one step further. Please do ask all the questions, asking anything at all that you feel is important that I've missed out. Because I really want to make sure I've covered everything. Or at least not made it too complicated, but not made it too simple. All right, that's it.